Well, Rahul Sharma is joining us, Director and Head of Technical and Derivatives at JM Financial Services. Rahul, good to have you with us here. Sorry to have kept you waiting. By the way, look at the market. The Nifty is basically climbed down to being absolutely flat. We were up 80 points, and you got 8 points left now, 19,332. Just a one-way kind of a move lower, gentle slope lower. Rahul, you've sent across a couple of charts, and we'll put them up. I want to start with the NSE 500 first. Not the Nifty or the Bank Nifty, the NSE 500. Which you're calling is the breakout of the year. Just talk to us about what you're seeing.
Yeah, so if we go slightly back around when in March, April, the markets were turning around, it was the Nifty 500 index which did give the breakout first, and then it was followed by Bank Nifty and the Nifty index. Now, this time around, what is happening is structurally there is a very good, strong ascending triangle pattern that has been formed on the monthly charts. Last week, we saw a phenomenal monthly close, a very strong weekly close as well. And mind you, this is the Nifty 500 index, which is more of a broad market indicator, which translates into at least 10 to 15% upside in the coming 3 to 4 months' time, which could mean a lot more upside for the individual stocks as well. So I think this bull run in terms of Nifty has just begun. We're just 3% away from the previous all-time high, around 19,500 or 19,350. There is a bit of resistance for the short term as well, but I think dips, if any, are to be bought into. And considering the market breadth, considering the way FIs have gone aggressively long on the index futures, considering the way client positions or retail positions are stuck on the short side, I think there is another swivel trade which can bring us possibly to the 20,000 mark in this series itself, and 21,000 by the end of this year. So both from not only from an internal strength perspective, but also from a derivatives positioning perspective, this indicates that this is a second leg of the rally which is beginning, and we are in for a structural upside from here.
Rahul, morning. It looks like the sleeping giant Reliance has woken up over the last few days. What are the charts telling you?
Yeah, so Reliance has been, an underperformer for most part of the time. In fact, the 22, there are twin tops in the 22 calendar year. Post that, we've seen multiple times the ratio. If you do a relative comparison of Reliance divided by Nifty, the ratio chart has reversed from these areas multiple times, 4 to be precise, in the last 18 odd months. So we believe this time also it will not be any different. So a simple catch up to the Nifty 50 would mean Reliance is back to somewhere around 2,800, 2,850. And if that does translate into an outperformance, we could very well be headed north of 3,000 on the upside. So, the risk reward still continues to be favorable for this giant. And we believe there is, more upside to be had in the coming few months. So structurally, we feel 3,000 is very much on the cards by the end of this year. One can look to accumulate around these levels, have a stop loss at 2,350, and we feel that this is one of those index components which is yet to fire.
LTIM and Tech Mahindra from the IT space, you like these two, Rahul?
Yeah, so IT index has had negative returns if we simply do a comparison from December till date, from December 22 till date. So only two sectors which fall under this category. One is the metals, which has not performed, and second is the IT, which has been negative. So we feel IT has formed a base. There is a double bottom on the IT index around the 26,100 mark. And now, finally, after the base confirmation is done, we feel that there is a good 10 to 12% upside to be had in the IT index in the medium term, and maybe more, towards the end of the year. So clearly, all the IT names like TCS, LTI, Mindtree, Tech Mahindra, for that matter, all of them have structures which are elongated consolidation structures. And breakout from these would mean a quick upside of around 20-25% on the mid-cap IT names and around 10 to 15% on the large-cap IT names. So TCS is something that we like. I think 3,600 odd should be tested anytime soon. On the mid-cap, LTI Mindtree is one which can be a high beta play. We've seen this stock deliver the kind of momentum that traders especially like on the derivative side. So around 20% upside is possible in LTI Mindtree. And as far as Tech Mahindra is concerned, the percentage upside is even more because Technically, the projected targets for the current setup are coming close to 1500. So these are more like 3 to 6 month kind of setups where we feel we are in for a structural upside from here. So IT in particular looks good, especially from a risk reward perspective. And lastly, coming to metals. So metals has been sort of an underperformer. Something that we particularly like, JSW Steel setup is quite attractive at this point in time. There are 3 weeks since last 3 weeks we've been trying to break out from the 800 mark. I think as and when it happens, then we should be in for a quick 10-20% upside in JSW Steel as well.
Okay, Rahul, thank you very much for joining in. So Rahul saying buy the dips, 20,000 is possible on the Nifty in this series and 21,000 by the end of the year. And he's betting on stocks like Reliance, IT names like TCS, LTI, Mindtree, Tech Mahindra, and even JSW Steel.